Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 17th of May. All right, now there's a lot of conjecture around the US default situation. Now, as far as I'm concerned, the US has defaulted a number of times. I know this article says at least 4 times, but now to me, and I don't want to sort of just brush this off, but it's like the Y2K sort of bug, right? You know, the panic around changing over to 2000, all the computers were going to crash. This US default situation, it is the biggest sort of joke in the financial markets, and really sort of puts a question mark over the validity of debt in the first place, because the US government just keeps walking away from it. They don't really pay it. They just increase the ceiling and we just march forward. So I don't think there's anything to be concerned about at all. I don't think anything will happen. This is it's just one of those things that it is an embarrassment, I have to say, for the US government. No one wants to do it. No one wants to pay the debt, because you know what? If it's in my time and I'm in politics, well, your time is over. So it just gets kicked down the road and we sort of march forward. So to me, I'm not even really giving it much time. It's a lot of great space on the articles for various news services. Taking up a lot of airtime, and that's what they want, right? They need a story, and that's the story. For me, I'm sort of looking more around almost a little bit more of the disappointment of the week so far. We've got a lot of data scheduled this week, and it's a little bit sort of chaotic. Some of the Chinese numbers are a little bit stronger. The unemployment rate in the UK a little bit weaker. Climate count change a little bit better. Okay, so there's a little bit to and fro here. The economic sentiment numbers were bad, but the consumer sentiment was actually quite good. So we're getting mixed data across the board. Canadian inflation numbers slightly better year on year, but the core numbers were just a fraction off. And we're not getting any defining movements in the data, right? US retail sales, okay, not quite on consensus month on month. You take out the autos and it was right on track. So at the moment, we are in a holding pattern, and you've got to understand that, because there's a little bit of discombobulation across various instruments. At the moment, US equity futures are up, and we're seeing a bunch of these currencies, well, go down, not up. Euro, sterling, Aussie, Kiwi. You're looking for that risk on, risk off sentiment to give you that confidence to go into the market, but it's not there at the moment, right? So there is a sort of a fracture across various instruments. One thing is clear: the commodities, okay, still getting punished, right? And that's where we are. Cryptos, well, having a nice sort of day in the sun. But let's have a look at the charts, because there's a few things, this is where trading is really about being patient and disciplined and consistent, right? Even though there's not things happening, it's a wise thing to go through your charts and see if there's anything sort of really happening. Now, this just gives you a good idea of what's going on. The Dow Jones Mini here sort of drifting lower. The S&P Mini sideways. I mean, it is drifting down towards the support line, whilst the NASDAQ goes up, right? The earnings season is throwing a sort of a loose blanket over the equity markets, especially the indices, and it's not exactly clear, right? Nothing's working uniformly. So you got the individual company earnings. Excuse me. The Home Depot results were disappointing, and this is where we are. We're in the battle, but this is the fight. And you're coming into Wednesday. You would have done well not trading up to this point. Okay, so I'm just adjusting trend lines as I see various things happening. Like, to me, gold. I'm not a big gold trader, but you can always sense when this thing's about to go. If anything, we had a little bit of a false start the other day. Well, let me just fix that up. And then you finally get the move, right? And this goes some way to telling me, and this is the move I was talking about the other day, a little drops down about 10 cents or $10, I should say, comes back, retests that trend line, and then finally rolls over. But gold's low. Gold's a safe haven. If this US debt crisis was something significant, you can be sure as hell that gold would be up around 2050, but it's not. Okay, there's big unwinding here. So don't fall into the trap of the media sort of fueling the whole debt sort of story, right? You come over here to the currencies, right? The dollar, to me, it shouldn't be here. right? Okay. This whole debt situation, once it's resolved, I think the story that's gone to bed at the moment is the regional banking situation, right? So, and that's what the media does. And actually, that's what the markets want you to do. They want you to sort of focus on a different story. So it takes the pressure off one of the key aspects. So to me, the move down in here on euro, sterling, Aussie, Kiwi, to me, I've got a feeling it's just all going to be corrected. Okay. We need a bit of an event or something to be resolved to get this into play. But the writing's on the wall. The dollar shouldn't be higher. The US numbers are cooling. You take out any sort of geopolitical stuff, and the dollar is weaker. That's what I'm anticipating. So there's no need to get sort of super excited at the moment. Even dollar yen's rallying, and the dollar's rallying against the Swiss. So the safe haven trade is not in play right at the moment. Okay, dollar CAD right back in the middle of the range. Oil sort of found a bit of a base around $70 a barrel, and that's where we are. So to me, I've got to be focused on what is coming up and what's going to be impacted. But at the same time, you want things moving in the direction that they should be moving. At the moment, these currencies don't make a lot of sense. But what you can do is don't just sort of turn off your screens, come into these things and start redrawing the trend lines to what is actually been happening. Okay, so just looking at sterling, okay, it has broken down here. Now it's hit that low and bounced back up to that 125 sort of and a half. This is the sort of new trend line we're looking for. So you can refocus yourself, refocus your charts, get yourself in the game. Don't be sort of despondent that, things aren't sort of lining up the way you liked. I've seen a couple of traders in the 247 trade zone saying, look, I just can't understand what's happening. I'm done for the day. That is excellent. That's what you need to be doing, right? If you don't understand what's going on, just turn everything off and go, you know what? This is a little bit too tricky for me. I'll come back and have a look later on. So redraw your trend lines. I still don't think it makes sense to me that the dollar's higher unless there's some other geopolitical thing that's about to come out that suggests that the US is going to race into recession. The retail sales figures that we saw today in the US, well, I didn't really sort of go a long way to sort of suggesting that everything's falling off the face of the earth. They were just slightly weaker, which was sort of forecast. So today, looking at the Aussie, wage price index, big inflation number for wages in Australia, that could have some sort of impact. Don't forget, with the current moves in these currencies, it's probably a bit of a short-term trade, if anything, right? Because I'm looking for something with real momentum, right? And you're looking for, something to really kick it into gear. US housing starts, building permits, well, they're a thing. That could be worth something to look at. And then you come down, there's a bunch of bond auctions, and that's pretty much all she wrote for today. So we're in the middle of the week, okay? So just relax, get everything tuned up. If anything, this is what I'm going to be doing anyway. I'm going to start preparing to look for levels where I can start getting short US dollars, right? And I'm not going to fight the trend. There's no need for me to start trying to pick tops here. But I will be anticipating a move back down in the dollar. And the only way I can do that is by drawing trend lines. Let me just get rid of that one and see how it pans out, right? So I'll draw them all here. And this one here, 2 touches, doesn't really actually have too much credibility at the moment, but it's the start of the next trend line. So I'll just make that orange so I can see where it is. And that's pretty much all she wrote. Okay. Be patient, disciplined, controlled, look for the opportunities, look for the cycle of if there's a connection with the equity markets and the currencies, the commodities clearly under pressure. And that's all we've got at the moment. The safe havens, well, they're not sort of really doing too much at the moment. All right, guys, that's it from me. Not a huge amount of focus on specific events, but hopefully going some way just to take the pressure off, because I don't want you getting all wound up about this US debt ceiling, right? To me, it's a storm in a teacup. And once that's out of the way, we can get on with sort of connecting what's happening in the US economy with what's happening with what the Federal Reserve is saying their plan's going to be. And that's where the next big cash windfall will come from. All right, guys, have a good one. All the best. Cheerio.